Welcome to my YouTube video for non-gang members and gang members. Okay, I want to show you what's going on and how this rate hike. I knew this rate hike wasn't going to happen, and I told my gang, and my gang members know this. I said this never happened. First of all, it's not going to happen because we have two things going on. One is if you look at every rate hike since 1950, we've had 118 of them. They only did a rate hike if the economic growth of our country, the GDP, was 4.5% or higher. We're at 1.9%, rounded off 2%. Now, we only had one time that we did that when our GDP wasn't at 4.5 or higher. That was December, and that was stupid. And she's going to take that back anyways, believe me. If you go back 35 years, each time we did a rate hike, you'll find that the market has already rallied 14% previous to the rate hike. You guys say, well, the market went up 14%. Yes and no. When it went up 14% right here on this last rally right here off of February lows, it was all rigged. It was all rigged up. It was all manipulated up with stock buybacks and everything else they could think of to move this up. Just like this one here was the last rigged rally up here. So that doesn't count. The institutions know, believe me, the buyers of stock knows if a rally is going up for the right reasons, revenues growth, earnings growth, margin growth, or for the wrong reasons, stock buybacks, buying 10-year treasuries to drop the yields to force everybody out of the bonds into the stocks, they know. So here is where we stand. There's our bubble. And as I said, if you take and look back here, we were ready to drop right here. This was going to be our third sell-off. This was the one I called last year in July and August. Actually, I called it in May and said it was going to happen in May. This was our second one after she raised rates, and this is what happened in January. This we're ready to drop just because we have terrible earnings, terrible job numbers, terrible manufacturing. We're in a manufacturing recession. Everything's terrible. And she was ready to be the third one. She came in, Aunt B, and put it up with a steel. She held up the market, what we call a steel I-beam pattern right here. She made sure the market didn't go down. So she started to tell her lies to keep it up. And her lie was, the first lie right here, this is when she started to move it up, because she had to get this market up for Hillary, because that's her marching orders from her boss, Obama. So that's when she said there was going to be a rate hike. Everybody from Europe came in, dropped their euros. They have to buy dollars to buy stocks. Can't buy stocks in euros. That shot, I'm sorry. And then everybody started to buy stocks, thinking, oh, we got this great recovery because she said she's going to raise rates. It was a lie. And then it started to pull back and she panicked. So that Friday right here, she created another lie. She rigged and manipulated the unemployment rate, which was 215,000 jobs each month for the last 2 years, especially this past year, year over year. And all of a sudden she drops it to 38,000. Why'd she do that? Well, it's because she put in extra folks, meaning those who are unemployed. She increased the number of unemployed who stopped looking for jobs, called discouraged, which lowers the participation rate, labor participation rate, which lowers your unemployment rate, which lowers, of course, the amount of people that are in the labor force. So that 4.7% was not because of the 14 million jobs as Obama goes around parading around and says it is. It's all because he increased the amount of discouraged workers, and the extra 160,000 decided not to look for jobs. All right. So where do we stand now? Well, here's the bubble. He can't afford to let this bubble break because of the elections. He's scared to death because Obama knows if this bubble breaks and it comes back down, okay, if we have a big sell-off in the market, then Hillary Clinton is going to lose the election. Nobody cares about the judge. Nobody cares about all this crap that's going on, about the or about his remarks about hey, let's the Muslims, let them stay home and They can't come here until we vet them. All this. Nobody cares about that. They all care about their wallet. So this rally right here, 1, 2. This third one, as I told you, was ready to drop. This one was ready to drop right here, and he prevented it from dropping. So she's got to get this rally back up for the election from here to November. She's got to get over to November. So she needs this to happen right here for this to go up. What I think will happen now that she didn't raise rates, I think we'll pull back. We'll pull back maybe about 10%. And then she's going to come in with QE. And with QE, that'll be enough to drive the market back up from here to November. So I think she's going to let it drop and then drop it back, make it back up, maybe make new highs, okay, so that they can show that the economy is doing great, showing the stock market, and the majority of people know the stock market has nothing to do with the economy. What has is productivity, but most people don't know that. Most people look at the stock market, and that's what his goal is right here. That's what he's doing. Now, today, with this with not changing rates, it shows that there is no recovery. Inflation, she claims today, was 0.6%. Well, the reason why she keeping the inflation at 0.6%, than being honest and say it's 8%, then they can no longer keep rates low. And the reason they got to keep rate low, and this is the problem she has, she knows she's got to keep the rates low. She can't raise rates because the economy's so bad, and we have to pay interest $400 billion every year on our debt, and interest just alone. The interest that we have, on our 20 trillion debt, plus we have interest on another 121 trillion debt. Those are entitlements, $400 billion. So what she's been doing is paying back our debt with cheap money, which the savers have been subsidizing. Savers, remember, she dropped the interest rate from where you were getting 4.5%, 5% on your CDs down to 0.25%. And she did that and screwed all the savers. And that's why we don't have investment. And you can't grow an economy without investment. And we don't have savings or investment. So what he's going to try to do right now is just get through this election, get her reelected. And that's why, like I say, you're going to get this pullback, and he's going to keep this interest rate low. He's not going to raise any rates between now and November. Trust me, he's not going to do that. Okay, because he's got to keep borrowing money at 0.25% so he can put on this interest right here, this debt rather. Okay, all right. So then we'll get our nice rally. Okay, all right. So what else is going on? Well, not only did she lie about the recovery too, remember, there is no recovery. I told you that she says I got to hit 2% target date inflation. Well, it's beyond that, it's 8%. But as I said, she lies to keep the rates low. And again, she knows she can't. She knows what's going on. There's no recovery. How could there be a recovery? And how could we be doing so well when we added 376,000 bartenders in the past year and waitresses, and 3 million since 2010? That's all we've done. Bartenders, waiters, waitresses. Isn't that amazing? And in December 2014, we lost 1.4 million manufacturing workers. And they've been replaced one-to-one with waiters and bartenders. So if the economy is doing so well, this is the 17th consecutive week, okay, that, again, I'm sorry, the 19th consecutive week that money's been being pulled out. Money's coming out. See, that's why she needed Europeans to come in. And the only way she could attract European money, she's not attracting American money. It's too smart. European, they're so bad off over there. And Germany just included themselves in the negative rates. Germany, if you live in Germany, you got to pay the bank to put your money in an account. Do you believe that? Things are so bad that she thought, okay, I can play this game and get all the Europeans over here telling the economy's doing wonderful. We're going to raise rates. And that's what this game was. So it'll come back down and we'll be fine. And I think then we get QE, okay? In the meantime, we're going to watch our golds go up. And I think golds are going to do very, very well. We saw GLD today started to take off. Our gold GLD, nice job today. Look at this right here. Um, so with the dollar, it's all about the dollar. Dollar keeps coming down. Our golds are going to go up. Gold's going to go up because people know the economy's no good. They want security. Oil is there's so many outside forces with oil. That's the problem. Who controls the oil price? But with the dollar going down, oil should be going up. Okay, but we'll work our golds, and that's the most important thing right now. And our oils, we just got to watch them every day as to what the interest rates are doing. Okay, and our banks are really the key. I think our banks are ready to really sell off big. And look, they've already started. Look at my Goldman Sachs. It's one of my 5 stocks right here. Look at how nice that is. And look here when it turned from green to red. So our plan is just to watch the dollar every day. That's going to lead the market up or down. It's that simple. Our money's going to still be made in gold and in still in commodities and oil. Okay, that's where most of our money is going to be made. And that's really it, gang. So let's just look forward to a sell-off in the market and hopefully another QE. In the meantime, remember, there's no such thing as a stock market, but only individual stocks in the market. And that's what we're going to trace, okay? See you on the charts.